Today's video is on Enterprise Group. They released both Q4 and end of the year earnings. I am going to take a look. I made this 5 best Canadian microcap stocks video back on December 19th. I chose 5 microcaps or small caps that I was super interested in. Here is the list of 5 stocks. Look at this. Enterprise Group is up 8% today. Gatekeeper is up over 8% today. Enterprise Group up 19.5% since I made that video. And all told, those 5 stocks since I made that video on December 19th, up 39.9%. 39.9% returns in less than 3 months. So good work to me. So at the very least, if you're watching this video, you might want to consider subscribing. It's the least you could do. And I have a free Discord you could join, or I have a paid Patreon where I can be a little bit more open to discuss some of the stocks that I'm interested in. Now, none of this is financial advice, and the intention of my channel is to connect good companies with good people, hopefully some good stocks with hopefully some good investors. But all of this today is my personal opinion and some information. I like buying good stocks and keeping good stocks. Is Enterprise Group a good stock? You're watching Common Sense Investing. My name is Cameron. Let's go find a great penny stock. The tickers for Enterprise Group are on the top right of this slide. They recently started trading on the OTC as well for American viewers. My latest live stream discussed their recent bought deal offering with Acumen Capital Finance Partners for a grand total of $7 million. That brought their share price down a little bit. It was cruising to 52-week highs. Share price came down to about 84 cents. I discussed how that was a bit ridiculous. I mean, Kraken Robotics had institutions buying in on the open market, which drove the share price up. But that's because Kraken Robotics had about 206 million shares already on the open market. Enterprise Group, with a lot less shares outstanding and a lot less shares on the float, offered those shares so institutions could get some ownership and they can get some cash. Why did Acumen Capital think it was a great deal? Well, a little bit about Enterprise Group. They have 4 different companies on the go. All of these companies are roughly in the oil and gas industry, although some of them can expand into construction. If you go to their website, they have a really nice updated investor webinar. But for this short video discussing their earnings, the real potential with this company that I am excited about is Evolution Power Projects, established recently in 2022. This is where they convert natural gas to electricity for remote work sites. In the middle of nowhere, they can offer a clean, efficient, natural gas-powered electrical grid instead of having 10 to 20 diesel generators running around on site. Now, this is just one of their products that they rent out and maintain for their end users, but as you'll see from their earnings, it's probably the most exciting product that's really taking off right now. I would say it's better than the competitions, but thanks to the bear market in oil and gas from 2014 to 2021, there isn't much competition for this product yet. And it shows. This is their financial performance from 2020 to 2022, massive growth, and their expected numbers for 2023. Did these come in as strong as they thought they would? Well, let's find out. Earnings were released March 7th, 2024. This is the day that I'm making this video. Now, one thing I'd like to point out for people that don't like oil and gas stocks, Enterprise Group is actually a clean energy stock using natural gas. So they're emphasizing technologies that mitigates, reduce, or eliminate CO2 and greenhouse gas emissions. So people might argue with me, it's natural gas, it's not clean energy, but it's a lot cleaner than diesel generators and all the other options out there. So the company is talking about a record net income of $6.1 million, the highest adjusted EBITDA of $13.2 in company history. Our customers are increasingly adopting technological advancements to drive efficiency, reduce emissions, and cut costs. So these are the drivers that are powering the growth in Enterprise Group, talking about cleaner energy alternatives. So if you like oil and gas stocks, you're probably going to like Enterprise Group. And if you're not a huge fan of oil and gas stocks, you can still like Enterprise Group, right? They're doing a lot of good things here. For example, here, their CEO says that the energy sector is witnessing a steady increase in capital spending, infrastructure investments, improved market access, better efficiency, heightened drilling, completion activity, favorable commodity prices. There's a lot of both things here in the industry. Now, he says that while these developments are encouraging, we remain focused on prudent and strategic decision making to navigate the evolving landscape of the energy industries. So there's a bit of a commitment here to keep expenses low. This is a company that survived a 7-year bear market in oil, so they're used to this. And prudent spending can even be beneficial in a bull market because here's the numbers, and they're outstanding. Year over year, 2022 to 2023, revenue up 25%, gross margins up 42%, adjusted EBITDA up 63%. So with their cost cutting and expenditure controls, even though revenue grew an outstanding 25%, gross margin and EBITDA was up even higher. Now, their Q4 numbers struggled a little bit. Revenue was 10%, gross margin percentage 17% higher, adjusted EBITDA 35% higher. If you can consider that struggling, that's actually still pretty good. But they said they had a very warm Q4. It wasn't enough cold, freezing temperatures. They're in the oil and gas industry. That can be a problem. But what I'm really excited about here is income per share up from 5 cents per share to 12 cents per share. So fantastic year for this company. Congratulations to shareholders. A couple more bits of information to pull out. 2023 is the strongest in recent history for this company, but activity in the first part of 2024 continues to be strong. Drilling and completion activity was higher throughout 2023, but customers are using more natural gas powered equipment to support site infrastructure. That's the beautiful natural gas plant I showed you at the beginning of this video. Now, there was project delays due to warm weather in the fourth quarter, and their second quarter of 2023 was basically on fire. There's so many forest fires. So they had some struggles, right? But the increase in revenue, gross margin, and EBITDA for the year are reflective of increased customer activity in 2023 while maintaining the operating efficiencies of this company. And that resulted in, at the top here, $13.5 million of generated cash flow. That is outstanding. A big piece of this company moving forward is their natural gas power generation business. Again, they keep talking about this over and over and over through their earnings. It is the future of Enterprise Group, as well as everything else. That really is the meat and potatoes of this company. But during the year ended 2023, the company acquired $15.1 million of capital assets, primarily for the natural gas power generation equipment and facilities, upgrading existing equipment and meeting specific requests from customers. They also purchased land to expand operations, and they're in the process of constructing the new facility. We'll talk about that in a minute. Because right now I want to talk about intelligent management. Since the initiation of the share buyback program, the company has purchased and canceled 11.3 million shares at a cost of 26 cents per share. So people are complaining about the $7 million of dilution to get cash to allow institutions to buy into this company. They bought back 11.3 million shares at 26 cents, and now they're selling those shares at 85 cents. I think that is absolutely fantastic. They did renew their bid to buy back more shares. I actually don't expect them to, and I hope they don't. They can use that money for something else. Additionally, the company has available tax losses of 14 cents per share and is in the process of developing a consolidated tax plan to utilize those losses. So potentially even better numbers next year if they can do that. What do I think of earnings? Q4, end of the year 2023. Of course, more weight goes on to 2023 because we're talking about the full year earnings. 0 to 5 stars. What's the common sense investing opinion? 4 stars. 4 stars. Congratulations. And closer. I was this close to actually putting it higher than 4 stars. So let's talk about what's going on. Number one, the positives here, cash. Right, we're talking about $13 and something million generated in cash, $7 million coming in from this latest offering. So they are rolling in cash right now. They have organic growth. The company said in these earnings that they actually didn't have a lot of investment in the company this year. A lot of their growth actually came organically as the industry was ramping up and they were trying to catch up with their customers' demands. That organic growth led them to revenue growth of 25%, gross margin growth of 42%. So without trying to grow this company too much, they had outstanding organic growth. Now, some of the problems here that held it back a little bit, People will call me crazy, but this is the situation sometimes where a little bit too much insider ownership can be a bad thing, because we've got what, 17% dilution for institutions to buy in. So, I mean, that's a bit of a red flag. Dilution is never good. However, it is bringing them some cash. They also had a weird debt increase. Debt went up, I think, 2.6 million, something like that. I can't really explain that, so I'd have to ask the company. The only other thing I'm concerned about right now for Enterprise Group is they seem to effectively talk about caution, caution, caution a lot. And this company right now, I want it to grow. I want it growing. I want it buying more equipment. I want it buying more land. I want it expanding. Right now, there isn't much competition in their space. It's a perfect opportunity to take advantage of that. So sometimes I get a little bit concerned that they're being a little bit too cautious. But let's talk about that. I pulled out everything I could find that I thought might have some impact on where their 2024 earnings could be. So, what are some things to look at here for Enterprise Group in 2024? Is this a stock that can continue to go up, or is there a lot of risk here that we need to look at? I think there's a lot of catalysts here to the upside in 2024. So $15 million they spent in December of 2023 on more equipment, including the natural gas power generation equipment. These products being rented out should be happening now, meaning that this revenue should be reflected in 2024. How much will that be able to increase their growth here? $13 million of cash flow generated plus $7 million of institutional cash incoming. What are they going to do with that? More buybacks, more equipment, pay down debt? Like, there's a lot of good choices here. The energy sector, steady increase in spending is what they're telling us. And the weather. I mean, they had some problems during the year. Q2, a lot of forest fires. Q4, too warm, not enough snow, not enough freezing weather. So, I mean, the weather improving alone could really help this company out in 2024. Some of the concerns I have, they have some weird debt, right? $3 million came out of nowhere. I can't explain it. They also have some high debt. People don't like that, right? It's also not at a good interest rate. So high debt, bad terms, are not the best terms for their debt. And they have more debt this year than they did last year that we can't really explain, right? They might be being a little bit too cautious. I would like to see this company grow, 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 take advantage of this bull market right now while they can. And of course, weather. I'm saying that weather could improve and they could have a much better 2024. Or, I mean, the weather could get worse. Who knows where it's going to go, right? That really impacts this company. Valuation still has a lot of potential for some multiple expansion, at least in my opinion, as well as 2024 could see another year of 25% or more revenue growth. If you want another opinion, please go to the Wolf of Oakville. He also covered this company. He also talks about a few things that I did not in this video, so a great second opinion. Thanks for watching Common Sense Investing. I really appreciate your time. Go have a look at some of my other videos and you might find your next favorite penny stock.